The most critical challenge in protecting and advancing sustainable public transit today is neither technological nor, strictly speaking, budgetary. It is to develop and implement financially resilient business systems that result in elegant transit, in an engineering sense, in a socioeconomic sense, and aesthetically. The Opman Company is pioneering an innovative approach to public-private partnership without dependence upon public debt or taxes. It relies instead upon competitive open market principles and methods inclusive of small and medium enterprise, and upon government to assert and protect the public interest by upholding existing laws and regulations while simplifying and facilitating integrated transit. Hello, my name is Joseph Potvin, Operations Manager for the Opman Company. The purpose of this presentation is to assist in understanding the OpenRailProperty development model. We have three parts: value for money, return on investment, and cost effectiveness. Let's begin with value for money, where the focus is primarily operating revenue. Let's begin at the bottom left of this screen. Land and property owners and developers worldwide know that in a metropolitan scale railway system, the property values increase substantially within walking distance of metropolitan stations. Now we show them separately here. They may be separate entities, they may be the same entity. The focus here is on properties that will increase in value by at least 25%. Now this can be commercial or residential properties, and it can refer to income or asset values. The reason that those property values increase in studies around the world is through provision of dependable, comfortable, practical transportation for travelers of many types. There's commuters, frequent travelers. There can be tourists. There can be taking ad hoc trips, and people, say, getting to a hospital appointment. That would be an ad hoc type of trip. So there's a variety of market segments that we're concerned about. But in general, land and property value goes up when that property comes with easy access to whole region transit. In addition to the basic travel, in the open rail and property model, we distinguish between the basics and enhanced travel experience. What's unique about this in transit is a pay-what-you-want model. Now, pay-what-you-want does occur in other sectors. There's a literature internationally about the pay-what-you-want model. It can work. In our system, the incentive for travelers to pay is that 100% of the money going into the passenger experience is spent on precisely that. It does not go into general revenues for the consortium. There can be money coming from the passenger experience service providers to the consortium because some of the ways of implementing improved passenger experience will require other parts of the consortium to be involved. So there's a license to the passenger experience service providers and negotiated revenue for that. Now there's a third level. There's first two levels here. There's the basics, there's an enhanced experience, and then third, the travelers will also have available additional what we call ancillary services from various other providers. For example, they would pay for food and beverage, they would pay for other transportation packages. A good example there is a guaranteed ride home. If you've missed the last train and you're across town, the consortium would have prior arrangements with other transportation service providers to get you home without having to interrupt the schedules of your family or friends. There's also additional marketable information services that passengers can purchase in the stations or on the trains. Also, there's quite a lot of useful information produced by a whole region railway network. The core data is available under an open data arrangement, but specialized data and analysis would be provided by the consortium for a fee to research and planning clients. So that's just a small additional source of revenue, but it actually provides an organized way to interact with other analytical organizations. So there's the full picture on the operating revenue. return on investment, that's to say public, private, and community capital. Capital comes in first and foremost from private investors and lenders. Here in the picture, when you say it comes in, it comes within the perimeter of the consortium agreement that may be spent by them in their own right, but be part of the consortium commitments that they make. So there's obligations on the part of the consortium to the investors and the lenders. Additionally, there's a close relationship to describe it with municipal and regional governments. Since the 1950s, metropolitan scale transit has been normally conceptualized, planned, developed, and operated by municipal and regional governments. Prior to the 1950s, between the 1850s and 1950s, that was largely private investors and lenders leading that. So this adapts the previous model with a new approach to business coming from the open source world. Municipal and regional governments, there's no there's no money going either way here. Neither the consortium pays the municipal or regional governments in order to run this service, nor do the governments pay the consortium to run the service. There's a mutual interest in this. So the consortium has to ensure that it's meeting the development objectives and, for example, the transportation master plans and so forth of the governments, and governments would be called upon to make aligned decisions so that this interjurisdictional type of service is feasible. Let's roll in the federal and provincial or state level programs. So this will identify funding programs here, but it could be a variety of other types of parts of government as well. Different levels of government can provide loan guarantees and grants to improve infrastructure, to meet where the consortium then meets development objectives, and can provide loan guarantees and grants to other levels of government to do that. All in all, though, the consortium is committed to all levels of government to align with development objectives. The general public, through the affinity clubs, there can be one or more thematic affinity clubs with the consortium, and they would pay member fees and contribute in various ways to the overall concept of running this metropolitan regional system. So, for example, a good thing for an affinity club to do would do an annual quality of service evaluation of the consortium. It's something that the consortium could do on its own as self-assessments. It should do that, but an independent voice would be the affinity club members to carry out such a review and provide genuine feedback to all parties. So here's the overall picture of the private, public, and community capital relationships. So cost effectiveness. If we're looking at operational expenses, the day-to-day running, well, there's lease fees that need to be paid to the holders of rights to railway corridors. That could be owners, that could be other operators in order to have running rights on those corridors. Also, fees are paid to train operators for them to operate equipment in the system. There can be more than one train operator. It's normal within the railway world to have more than one train operator on a single line, or to have different operators on different lines. It's all coordinated through dispatch, and I'll show where this specialized service such as dispatch shows up on this diagram shortly. The consortium would do bulk fuel purchases, bulk internet purchases, and other core services that are required to run the system. And professional service firms provide analysis and advice in exchange for fees. So, for example, I mentioned dispatch. So here you have dispatch services, which is a specialized engineering service with transit analysis being provided to the consortium. This is the normal way that even large railway systems approach this. Rather than doing it in-house, they usually hire it out to the specialized companies. Companies such as my own, the Opman Company, shows up here providing advice and analysis and assistance in exchange for fees. All of the documentation of the OpenRailProperty development model is under a Creative Commons attribution license, so it's shared. Opman has no vendor lock-in to a role with this. We do our work and share it, and hope that that generates work for us. In specific regions, such as Canada's National Capital Region, there's a company that has been established some years ago called Mobility, Ottawa, Outaouais Systems and Enterprises, Inc., to implement a Rail+Property development model within Canada's National Capital Region. Other companies would be created to provide services to different regions, or it could be existing companies in that space. It's a competitive market. So here's the whole value for money and operating revenue picture. Here's the whole picture on private, public, and community capital, and here's the picture on operational expenses. There's many parts, as you can see, so we've run through it in a stepwise fashion. We hope this is useful to you. In the future, for any information, be happy to hear from you by email, jpotvinATopman.ca, or there's my phone number as well, 819-593-5983. Look forward to hearing from you. I hope this is useful. Thank you.